Let's talk about things from a slightly geopolitical angle first. Is this playing out in your sphere, in your FX sphere right now? Put certain currencies in focus, I guess.
So while we remain generally bearish on emerging market FX, I think that the outlook for the Russian ruble is actually not that bad. I mean, of course, we have to, in the past week, we had to increase the risk premium in the ruble. But when you look at other factors, they are actually quite supportive for the ruble going forward. So you see that Russia is back into play. You see that the sanctions against Russia are going to be reviewed in January. So the question is, when we are seeking this alliance against the Islamic State, can we still maintain those sanctions against Russia? I think it's very unlikely. So we will have at least a partial lift of those sanctions, which actually should be positive for the currency. Secondly, there's a restructuring story taking place in Russia. Third, when you look into what happened in the past couple of years, a significant decline in the Russian ruble, and that allowed, in ruble terms, revenues from exports of oil and other commodities to be less hit when compared to others. And I think that is going to stabilize as well the local investment outlook. So the outlook for the ruble is not as bad as for other emerging market currencies.
That's interesting, because some commentators have suggested, or some people in that very seat, Hans, have said, well, yes, there could be this rapprochement between the West and Russia, which could be something that could be seen as positive for the ruble. But on the other hand, the oil price is so weak, and the problems structurally facing the Russian economy are still entrenched. But you seem to believe in that structural change story.
I think that the structural changes in the economy are visible. On the oil price, of course, we have to admit that it's quite a bearish factor going forward. So if you wanted to play that, and maybe you play that on an oil-neutral way, so you can buy the Russian ruble and say you take Canada against that, or you take Norway against it, so you take the oil angle out of that. But I think on a relative basis, the ruble should be okay. It is no longer perceived as weak, let's say, a year ago or even 2 years ago.
There's another interesting geopolitical influence on European economics, perhaps we should describe it. Jeroen Dijsselbloem, the Dutch finance minister, saying this morning that security takes precedence over short-term deficits. We heard from some in France talking about how spending on security had to come first. How is this changing the landscape, do you think, from that perspective, from the fiscal side?
So when you take a textbook, then you would say that a better fiscal approach, fiscal expansion that is currency supportive, and I think that could as well lend here some stabilization into the euro. But beyond that, you need to look into the growth potential of the European economy. How much is that? So our economists estimate the growth potential between 0.8 and 1%. So that is significantly lower as it used to be. And then the question you have to raise, how can you generate a return of, let's say, 2.5%, as many pension funds in Europe are supposed to do, within an economy which has this low growth potential? And that actually means that those real money accounts become exporters of long-term capital. And I think that is going to take the euro lower over the long term. Now, of course, you mentioned that before. We have seen the euro in a losing state environment for some time. So that means at one point, and I think it may be around early December, you will have a rebound in the currency. But I think that is going to be short-lived and providing opportunities to sell.